So there was a question earlier tonight about sort of this obligation of the trustee and the duty to account to the beneficiary. And this is where, your trustee is performing the administration of the trust, and at the end of the year, their accounts need to be approved. We need to vet and ensure that they've acted prudently, that their expenses are reasonable. And so that accounting and that duty is traditionally due to the beneficiary, the person with a disability. And, much like any other accounting report, there's a format. There's a format of how those numbers should look. There should be an accounting that provides a description of the assets and liabilities at the beginning of the accounting period, and then a list of all the receipts and disbursements made during the period, and then broken down into what we would call capital and income transactions. And so the beneficiary needs to see that. They need to know that those are reasonable expenditures, and that they can understand that accounting, because ultimately they're going to approve that. The trustee's remuneration is also going to be incorporated in that accounting, and I'm going to talk in a moment about remuneration. Now, generally speaking, when a trustee is producing an accounting, it's an informal process. The beneficiaries traditionally have the ability to vet and informally approve. And so when those accounts are presented, the beneficiary can then agree to those or disagree. If they disagree, then obviously we need to go to court to have those accounts approved by what we call the registrar of the Supreme Court of British Columbia. That's a costly process, and it's not something that we want to commonly do. And so there's a duty, I think, for trustees and beneficiaries to work together, and ensure that we're being reasonable as well. And the court will expect that as well. And if you bring a matter to the court and one of the parties, whether it be the trustee or the beneficiary, is not acting reasonably, the court will come down hard on you. So, this is obviously important in terms of not only Revenue Canada, the beneficiary, but also the ministry in terms of summaries and ensuring that you're accountable to all these parties, and ensuring that we're making disbursements that are permitted and that are acceptable under the eyes of the ministry. And so where it becomes challenging, though, is where that beneficiary does not have capacity and they cannot approve their accounts informally. And so where there's capacity issues and where there is no representative or no committee able to approve those accounts, then unfortunately we have no choice but to have those accounts vetted by the Supreme Court of British Columbia. And so that's where we end up creating more cost, because there's a cost then to provide, that sort of accounting to a registrar. Typically, it would involve lawyers. And so at that point where we have regular passings of accounts, and we're creating that type of expenditure, that may be a point where we start to contemplate whether a committeeship might be more efficient, and getting someone that can be a committee to be able to act as a guardian to approve those accounts in a more efficient economical manner. Yes, there's a cost to having a committee appointed, but it's a one-time cost, and it may, over the length of that trust fund, provide some savings to avoiding unnecessary passings of accounts. So these are kind of the practical, real-world dilemmas that trustees face, and I think it's important for not only trustees but families to understand these elements of responsibility that a trustee has, and it acts again as a checks and balance, especially where we have vulnerable beneficiaries that are subject to the control of a trustee. We want to have these embedded controls that are in place to ensure that the trustee is acting prudently.
Right. Well, and I know some people who are online may be wondering about committeeship versus a representation agreement. And I know we had talked about possibly doing another webinar down the road about the pros and cons of those, because there are often questions around the strength or structure of a representation agreement and the control that might come with committeeship. And the truth is there's risks associated with committeeship that people need to know about as well that could take us a full webinar of 2 hours just to think about it.
And that's a great idea, Angela. I think that could be a future session for us. And, I might even suggest that we encourage folks from the public guardian and trustee to be a part of that. And, it's an area that I find is growing in I guess, in our community. I think we're talking more about committeeship. I mean, I think, again, and I shared this at the last webinar, that, I think committeeship is a drastic last resource. And I think it should only be undertaken as absolute necessity. I don't think it should be utilized without a lot of thought. We are taking away someone's ability to make decisions, and we want to do that carefully, but we also want to recognize the cost of doing that and whether it's really necessary. And so we don't go out and get committeeship just because it's something that is considered, what everybody else is doing. It's got to be necessary for your family and your son or daughter, and ensuring that, we have some clarity about why we're actually getting committeeship. And so I think it would be a wonderful topic. And I know many of the families that I work with are, asking the question about committeeship on a regular basis, and I think that it's a discussion that I'm sure many would welcome. Committeeship, COMMITTEESHIP.
And one thing to note is anywhere you type it, it will always show up as needing spell check. Yes, it doesn't matter. It's not a recognized word in whatever computers you